Something happened in January 2026 that will reshape the entire global financial system. And it didn't come from Washington, Wall Street, or the Federal Reserve. It came from the BRICS alliance. Brazil, Russia, India, China, South Africa, now joined by Saudi Arabia and Egypt, have just flipped the switch on their new international monetary system. They call it UNIT. And right now, it is live. It is operational. It is already being used for cross-border trade settlements. Let me be absolutely clear. This is not a proposal. This is not a pilot program. This is not coming soon. UNIT is operating right now as a real alternative payment system, allowing these countries to conduct massive trade transactions without touching a single U.S. dollar. For your entire lifetime, the U.S. dollar has been the undisputed king of global trade. Almost everything bought, sold, or exchanged internationally was priced and settled in dollars. It was the only system that mattered, the only game in town. So what fundamentally changed? BRICS didn't attack the old system. They built an entirely parallel system. They created their own financial infrastructure, their own rails, their own settlement mechanism, and they just opened it for business to nearly half of the world's population. They haven't destroyed the dollar-based system, at least not yet. But for the first time in 80 years, they have created a real, functioning alternative, backed by the fastest-growing economies and the largest populations on Earth. The era of the dollar having no rival has officially ended. The monopoly is broken. How does UNIT work? Its design is the strategy, and it is deceptively simple. It rests on two foundational pillars, addressing the two biggest concerns of any new currency: stability and sovereignty. Pillar 1, gold. 40% of UNIT's value is directly anchored to physical gold stored in secure vaults within BRICS countries. This is not paper gold, not certificates, not ETFs. This is real metal, auditable and verifiable. The message is unmistakable. This currency is anchored to something real, something that has held value for 5,000 years. Trusted globally regardless of politics. This is their credibility anchor. Pillar 2, a basket of BRICS national currencies. The remaining 60% is backed by a weighted basket of Chinese yuan, Indian rupee, Russian ruble, Brazilian real, South African rand. The message here is our combined economic strength, resources, manufacturing capacity, expanding consumer markets, and over $28 trillion in GDP is sufficient to support a global reserve currency. 40% ancient safety through gold plus 60% growth from the rising world. UNIT is designed to be stable enough to trust, but dynamic enough to appreciate alongside the growth of these economies. Why now? The answer is February 2022. After Russia invaded Ukraine, the West, led by the United States, did something unprecedented in modern financial history. They froze over $300 billion of Russia's foreign exchange reserves. For other countries, this was a terrifying wake-up call. The message was crystal clear. Back-end index pointing right, if your assets are inside their system, they control your assets. If it could happen to Russia, the G20 nuclear power, it could happen to anyone. Saudi Arabia saw it. China saw it. India saw it. Indonesia, Turkey, everyone had the same thought. We are vulnerable. UNIT is that vulnerability's operational plan B. Not to wage financial war against the West, but to build a financial shield. Does it actually work? Yes, and we already have proof. By January 2026, roughly 90% of bilateral trade between Russia and China, worth hundreds of billions of dollars, no longer uses the U.S. dollar. Zero dollar. This is a real-world stress test of UNIT. They have demonstrated one thing conclusively. Back-end index pointing right, large-scale trade without the dollar is entirely possible. The real scale of BRICS. Expanded BRICS now represents 46% of the world's population, 6 billion people, over $28 trillion in GDP, control over key resources, oil, gas, rare earths, agriculture. UNIT was not born in a vacuum. It has immediate users, immediate demand, and immediate purpose. The impact on gold. Because unit is 40% gold-backed, structural demand for gold will rise. It is no coincidence that JP Morgan projects gold at $5,000/Oz by late 2026. Some analysts suggest $8,000 or higher. This is supply and demand mathematics, not emotion. What does this mean for the United States? It does not mean the dollar collapses tomorrow. It means the dollar's exorbitant privilege begins to erode. Not explosively, but gradually. Every transaction not settled in dollars is a small reduction in global dollar demand. And when that accumulates over time, U.S. financial power weakens in ways that are irreversible. Unit's biggest challenge. Not the U.S., not the West. Internal contradictions. China versus India. Russia versus China. Institutional, political, and strategic differences. History shows that monetary alliances are extremely hard to maintain. But history also shows something else. Back-end index pointing right, a shared enemy is powerful glue. Fear of financial weaponization by the Western system may be enough to keep BRICS aligned, at least in the medium term. Final conclusion. This is not a the dollar is dead story. This is the end of monopoly. For the first time in 80 years, the world has a choice. And the mere existence of choice is enough to change everything. We are entering a truly multipolar financial ecosystem, where some trade is in dollars, some in unit, some in euros, yuan, and others. The flag has been planted, and once planted, it is very hard to remove. The rules of global finance are being rewritten in real time. Ignoring it is no longer an option. So what does this mean for you? Personally, this is where most analysis stops. They talk about geopolitics, superpowers, systems, but not where you stand in this picture. The truth is, you don't need the dollar to collapse for your life to get harder. You only need it to gradually lose strength. And that is exactly the scenario unfolding. As global demand for dollars declines, the U.S. must pay higher interest to borrow. Budget deficits become more expensive. Inflation becomes structural, not temporary. Cost of living rises even if wages don't. This is the invisible tax. You don't see it on a bill, but you feel it every day. Food costs more. Housing moves further out of reach. Savings lose value faster. Not because you did anything wrong, but because the rules are changing. Why this matters, especially for developing countries. If you live in a country that imports heavily, holds dollar-denominated debt, has a weak currency, depends on Fed interest rate decisions, then you are on the front line of this financial earthquake. Every time the Fed raises or holds rates high, capital flows out of emerging markets. Local currencies weaken. Dollar debt becomes exponentially heavier. That's why countries like Vietnam, Indonesia, Turkey, Nigeria, Pakistan are watching BRICS unit very closely, even if they don't say it publicly. Not because they are anti-American, but because they need an exit. Unit offers an alternative settlement option, reserve diversification, a negotiation tool, and in global finance, choice equals power. The future will not have one dominant currency. The most important thing to understand, we are not moving from dollar dominance, unit dominance. We are moving from monopoly competition, and competition brings higher volatility, greater complexity, less certainty. In the new world, businesses must manage currency risk. Countries will split transactions across systems. Investors can't just hold cash and wait. The simplicity of the past 40 years is over. The survival strategy, not panic, not selling everything, not believing clickbait headlines about imminent collapse, but rethinking value. Throughout every major monetary reset in history, one rule repeats. Paper changes. Real assets endure. That's why gold returns to center stage. Strategic resources are repriced. Domestic supply chains matter. Self-sufficient nations are less vulnerable. At the personal level, this means don't anchor everything to one currency. Don't place blind trust in one system. Understand that absolute safety no longer exists, only intelligent. Diversification. The most dangerous thing right now is not unit. It is pretending nothing is happening. History shows the people who suffer most in monetary transitions are not the poorest, but those who believe this time will be just like last time. This time is different. This time we have technology, massive populations, powerful geopolitical incentives, a functioning alternative system. The real ending BRICS unit is not the end of the dollar. It is the end of complacency. It signals that the world is entering a genuinely multipolar era. Financial power will be shared, not centralized. Those who understand early gain a massive advantage. You don't have to choose sides, but you must understand the game. Because whether you care or not, the game is already being played, and it will directly affect your money, your job, and your future. The next phase, what happens after unit exists? Major historical shifts never arrive with explosions. They arrive through new habits. Unit doesn't need to defeat the dollar. It only needs countries to start using it reflexively. First, long-term oil contracts, energy trade, central bank bilateral settlements. These don't make headlines. They appear in appendices, technical reports, dry statistics. But that's where the real world changes. Once a company gets used to settling in unit, once a central bank gets used to holding it, once a finance ministry issues debt without dollars, the old system is no longer the default. The U.S. response will not be loud. Many expect retaliation. The reality is subtler. The U.S. cannot ban unit. It cannot sanction half the world. It cannot freeze a system it does not control. Instead, it will keep interest rates higher for longer, attract global capital with yield, increase pressure on intermediary countries, use rules, standards, and compliance to slow flows. This is not hot war. This is attrition warfare. And in attrition wars, ordinary people feel it first. A hard truth, neutrality is getting harder. In a multipolar financial world, you don't have to choose political sides. But capital flows will force system choices. Businesses will ask, how do we settle? Through which rails? Banks will ask, which reserves carry the least risk? Countries will ask, in a crisis, who controls the valve? Every decision leaves a trace. Quietly, but permanently. Unit is not for retail investors. This is where many misunderstand. Unit is not designed to be bought in apps, traded by speculators. Used like crypto, it is state-to-state money. You may never touch unit, yet it still affects you through commodity prices, capital flows, exchange rates, interest rates. This is invisible power, and that makes it more dangerous. When gold returns, the world won't be romantic. Gold is not rising because people believe in gold. It rises because it cannot be frozen. It doesn't rely on promises. It needs no third-party validation. In a world where trust in systems declines, assets that require no trust win. But this brings consequences. Nations compete for supply. Gold exports are controlled. Physical flows become quieter, more secretive. Price is just the surface. The real battle is underneath. The overlooked risk, financial fragmentation. Multiple parallel systems mean higher transaction costs, fragmented liquidity, harder to predict contagion. A small shock in one system can trigger domino effects in another before anyone reacts. The world will be less stable, but not collapsed. And in such a world, those who prepare survive better. The final question, not who wins, but where are you standing when the rules change? Do you have flexible income sources? Assets tied to reality, not just numbers? Adaptability to currency volatility? Because in transition periods, no one is fully protected. Only those who understand early, those who diversify risk, those who don't lie to themselves that this is far away. Cold, honest ending. Financial history has no mercy. It doesn't care how hard you work. It rewards only those who understand timing. BRICS unit is no longer an idea. It is an event. And from this moment forward, Anyone analyzing the world as if the dollar has no rival is using an old map in a new terrain.